Hi guys, hope you guys are doing very well. In today's video, we're going to discuss how we can build a very strong and effective market view, market bias. There's many ways we can do this using tools such as COT data for traders. One of the tools I want to talk about today more specifically is the seasonality data. How can we use that very effectively to make our market view? And there's an example I want to go through. So this is the trading day that was on Monday, start of this week. Before we get into that, if we actually look at the S&P 500 seasonal chart, now what you can see on the screen there's a few on here, right? Now, I want to focus more towards, naturally, the election year, right? We are in the election year now. We're, funny enough, a few days from it now, less than 2 weeks now. Around that, less than 20 days, I should say. Point is, though, we want to focus on the election year. And you can see if we look at where we are now, which is midway through October into November, the election year cycle does suggest a bit of weakness. Now, we've got to take this report as this data does not suggest or mean that, sell the S&P, don't look and just hope for the best, right? No, not at all. We need to make sure we relate this information to the actual chart, right? So if we look at the S&P 500 chart, and if we just look at where we are technically, right? So get rid of all the lines and everything here. So we can see markets are trading at all-time highs. That's fine. We are clearly in an upward trend. So naturally, as we approach all-time highs, we're naturally going to need to look for a phase two. Now, that seasonal weakness that is suggested to come from now into November, it may just be a phase two of this trend. Now, we've got to make sure we relate this move to the actual chart. And what I mean by that is with the S&P, what it does a lot is when we have pullbacks as such, when we're looking for pullbacks, the markets may not always give us that, right? You can see price moves higher, holds, moves to the upside. Price moves higher, holds, moves to the upside. So the market may do something very similar. It may just hold and then move back to the upside for the end of year rally. Now, because it's the S&P, and the S&P is the king asset for all indices, we can use this information and we can use it to trade other asset classes, such as the Dow Jones, for example, right? Because the S&P sits at the very top, everything else sort of falls under that umbrella. So with that awareness, naturally the S&P and the Dow are positive correlated. We're looking at the S&P seasonal chart. We can trade the Dow Jones using the seasonal chart, right? So if we look at the Dow Jones over here, and in fact, if we go on the Telegram groups, actually, because we post this in our groups at the start of the trading week, right? 21st of October here. And you can see over here, price is starting to break structure over here. Like I said, we can use that positive correlation to our advantage. S&P, Dow move coincide to one another. Here's the Dow Jones. Now, a lot of the questions I've got is, Cameron, why are you looking to sell here, right? Markets at all-time highs, 4 hours in an upward trend. Why on earth would you want to look to sell here, right? And you can see the justifications at the start of this video, right? Number one, we can see that the seasonals were suggesting we're looking for the market to go short of the S&P. The S&P and the Dow are very positive correlated, and therefore that justified the reasoning to go short. Of course, we'll make sure the technicals are there. But pay attention to the market. So this is the market before the open. You can see the time. See, this was posted 2:14, so 60 minutes before the market opened. And if I show you what the market looked like, same day, 21st at 7 minutes past 4, and you see when the market really, really cracked on to the downside, right? And if you look at the market, what it did at the end of the session, you can see the markets have really cracked on from the 21st all the way down, and you can see still all-time lows. So that was a very quick video there on how we can build a market view. Hopefully this was very clear. Give you some of an insight. If you are interested, we'll learn more how we use this data to our advantage, to our decision making. Drop us a message, subscribe as always, and we'll catch up very soon. Take care, guys, and goodbye.